Today is October 30th, 2024. It's a very eventful day. It's the fifth game of the World Series. It's also the day we learned that the economy grew 2.8% in the third quarter, meaning that it has been a very resilient economy. We averted a recession with those rapid interest rate rises. And now we have investors wondering, hey, will there be a Santa rally? Or since we've had such a strong year this year, should I capture my gains? Now, also, October 30th this year is World Sustainability Day. So we'll also talk about that. All this and more when I get back. Remember, you can always share this free video conference with your friends. YouTube.com/Natalie Pace. And if you have a topic you'd like to suggest, or if you want to make sure you join us live next time, email info@nataliepace.com with videocon in the subject line. All right, we'll get started in just a moment. Okay, so let's get started. I want to start with our third quarter GDP report because it turned out to be really resilient. It's 2.8%. And that's pretty strong because we were really worried that the rapid rate hikes that we were seeing in 2022 and the beginning of 2023 were really going to push us into a recession. The Federal Reserve Board was trying to execute a soft landing, and they really have seen the economy perform really better than most people expected that it would. So headed into the Santa rally, we're going to have, this is our first, it's called the Advance Report at the end of November. It'll be the second edition. The third revision will be at the end of December. So we won't know about the fourth quarter until the end of January. So right now it's going to be revisions should be continued good news through the end of the year, and that does bode well for a Santa rally. Of course, we also have a very contentious election coming up on Tuesday. And what's interesting about that is that it might not bode as poorly as you might think. And I'm going to show you the statistics around that. And I'm also going to include a link to the blog that I published on this particular topic. But let me show you a few things here. So the first thing that I would like to show you is, so this is the GDP report, and it is released by the Bureau of Economic Analysis. And again, this is the advance estimate, and we'll get the second estimate at the end of November, the third estimate at the end of December. Now, the other thing that I wanted to show you is that the fourth quarter, again, we're not going to get this until the end of January, but it's expected to be pretty strong as well. Now, this is very early forecasting, but they're already forecasting for it to be about 2.5%. So we'll see. We'll keep you updated on that. But one other thing that I wanted to show you is that the S&P 500 has already had a fairly spectacular year. So as you can see, we've had over 22% gains so far. And that's actually performing above where a lot of the election years have performed. Let me show you. This is the election years. And as you can see, the last 10 years, they've done pretty well. But when we look at the 20 and the 30 year, not as well. And this is part of the reason why right here. So during election years, we are batting 50% on Santa rallies. You can see that in the year 2000, that was the start of the dot-com recession. We were down 8% in that Santa rally quarter, October, November, December. In 2008, it was even worse, right? That was right before during the Great Recession. It was after Lehman Brothers, and it was before the bankruptcies of General Motors and Chrysler, but you could already see the writing on the wall. And then in 2012, we also had a minor correction during the Santa rally. So, since 2012, we've actually seen a little bit stronger. So, actually, sorry, it's a little bit less than 50% because this will be, if we are able to pull off a Sand rally this year, then sorry, it's 50% between 2000 and 2020, and this year will determine, which way it goes, right? So far in October, we're up almost 2%, not quite. Now, what are the factors that will determine whether or not we have a Santa rally? And is this contentious election going to be something that could really be a problem, right? And we do have, sadly, other contentious elections that we can compare it to. We had Gore versus Bush in 2000. We had the insurrection in January of 2021 and a very contentious election in 2020. So we can actually look back at those things and what happened then, right? So let's take another close look at those years. And you can see here that in 2000, we did not have a Santa rally. And obviously, 2001 and 2002 were down years in the markets. We had a very severe correction in the dot-com recession. That's one that I talk about a lot. And I say that between the high of March 2000 and the low of October of 2002, the NASDAQ dropped 78%. So if you had a lot of dot-com stocks, your $1 million could have dropped all the way to 220,000. Now the Dow and the S&P did not drop as far. This time around, the Dow is the problem child, and the NASDAQ is full of the Magnificent Seven, and that's been pushing the S&P up as well. So if the tables have flipped, our dot-coms, are now the Magnificent Seven, and they're the ones that have high profit margins and high growth and are really, they doubled in share price last year. They're doing great this year as well. They're still pushing the market to new highs. So it's a different story this year. But I think it's also important to look behind the headlines on these, right? Because what's really interesting here is that in 2020, very contentious election, and yet we had a super Santa rally, better than any of the other ones on this list dating back to 1992. And in 2021, after the insurrection, we actually had a gangbuster year. That was one of the best years on Wall Street. So again, is it politics or is it the economy? And of course, if politics devolve into a civil war, that is going to harm the economy. However, after an election, it's really about the economy more than who got elected. So I've seen a lot of emails from people that are trying to scare people and saying, hey, this is going to be another 2000 thing, and we're going to see this major sell off, and you better buy gold now, or you better buy Bitcoin now, or whatever it is that they're trying to sell, right? And the truth is that if you look at that, you're missing out on the Enron debacle, the complete meltdown of the entire dot-com and telecom industries. So there were a lot of fundamental reasons why we had such a severe correction in 2000 that had a lot more to do with the economy and the strength or not of the companies, the valuations of the companies, whether or not they were actually making money or still losing money. Many of the dot-coms had been cash negative for 3 to 5 years. So let's take a look at that. And again, I am going to have this blog. The link is always going to be in the description on youtube.com/Natalie Pace. So be sure that you're subscribed there so that you get notice when it goes up. So here's the blog. And it's, will there be a Santa rally or will the election tank stocks? And because I had seen so many emails trying to scare the heck out of people and saying this was going to be another thing like 2000, I really just compared this election with the 2000 election. And there are a lot of comps. So stocks are high. Stocks were very high then, and they're very high now, right? So in 2000, the price earnings ratio was the highest really it's been in over a century. This is from Professor Robert Shiller. He's a Nobel Prize winning economist. And as you can see now, stock prices are, almost as high, not quite as high, but much higher than even before the Great Depression, right? So here's the Great Depression right there. Here's the Great Recession right there. And here we are, very overvalued in terms of valuations. As an example, NVIDIA, which is the talk of Wall Street, and definitely is hot, hot, hot in terms of revenue growth and profit margins and leading in generative AI. But the company only makes $30 billion last year in net income, and it's worth over $3.5 trillion. So the valuations are built in for years down the road. They're not saying, oh, we're valuing it what it's valued today. Otherwise, then it wouldn't really support that. They're valuing it saying this is a company that's going to be worth this in 2 or 3 years. And those of us that are investors know that a lot can happen in 2 or 3 years. And by the way, when stocks descend, a lot of times it has a ripple effect even on the best stocks because generative AI may be something that companies have to pull back their investments on. So let's move on and I'll show you a few more comps between now and 2000. So earnings are really strong in the Magnificent Seven this time around. Back in the day of 2000, it was 5 companies that were leading stocks to all-time highs and taking everybody up with them. Today it's 7 and taking everybody up with them. So very similar as well. When you have most of the gains concentrated in a very few number of companies, that is not a broad strength in the economy. This Magnificent Seven is pretty strong. And we do have recent stock report cards on it. Email info@nataliepace.com if you like stock report cards, and we're happy to send it to you. So again, this is the 1 year performance in last year. You can see that stocks are above 26% gains, total return. So I talk a little bit more about the earnings and some of the various companies there. And I also talk about why the Dow is really a problem. And definitely, we talk at the retreats, those of you that have attended, why we want to go for 21st century companies instead of companies that were founded in the last century. And there's many reasons for that. And they have a competitive edge in performance. If you had a conservative portfolio, you could have actually earned under 10% or lost money last year when stocks hit that 26% in total return on the S&P. And that is if you had the Dow and if you had long-term bonds. So it's super important for you to know what you own and why, to be leaning in. It's funny because sadly, we've been talking about that you're not getting paid to take on the risk of bonds between 2009 and really up until 2022 when they started the rate hikes. Then it was tricky, right? Because you had to keep the term short and the credit worthiness high because we have heightened credit risk and duration risk. We saw that in 2022 when stocks dropped by 19.44% in the S&P 500, long-term bonds dropped 26%. And that's the side of your portfolio that's not supposed to lose money. So, and it didn't gain it back in 2023. So this is still an area of great concern. We just had a bonds and what's safe masterclass. It heightened duration and credit risk. This still remains a problem, even though the interest rate risk has abated. If you want to register for our upcoming retreat or renew an all access pass, we have a free coaching session for you if you do it by Halloween. But if you would like our bond masterclass recording, I'd be happy to throw that in. Just be sure to let Heather know and do it by tomorrow, Halloween, October 31st. So back to our comparisons here. So the political uncertainty is real. And we did see a drop during the political uncertainty in the 2000 election. But, if you think that that was the only story, you were really ignoring a lot of the other problems that were happening. So the dot-com slide started, the high was in March. That was, months before the election. And And then we saw, the Enron thing started happening in early 2001, but we started seeing major signs of a problem in telecom in 2000 and questions whether or not they were cooking the books. We saw dot-com bankruptcies. We saw the AOL Time Warner merger. That was a problem. Ted Turner very famously said he lost $7 billion in a day. That was in early 2000. So again, if you think that it's only about the election, you're really ignoring a lot of real problems that were going on for months before and months after. Don't forget that we had Enron go bankrupt in 2001 and we had 911, right? So that deepened what was already a big slide. So the slide in stocks began in March of 2000, and it was already way down before 911 happened. So again, it has a lot to do with the economy itself. And we can talk about that in just a moment. Before I let you guys go, or before I answer any questions you might have, I do want to point out that today is World Sustainability Day. And this is something where, I'm a greenie. Full disclosure, I vote for the planet every time. So that's my particular thing that I think is the most important is the planet, right? So because it nourishes and sustains us, and without it, we're doomed. The planet will find its way, right? It gets rid of species a lot of times over the millions of years, billions of years. But it's whether or not we want to stick around that really it's in our self-interest. But there's another thing that's in our self-interest, and that is that smarter energy choices can literally save us thousands of dollars every year. And it's kind of interesting because I talk to people about, as you know, the power of gratitude. And I say, look, if you're not happy paying your bills, then that's an indication that maybe you need to fix what you spend your money on. Because I'm super happy paying my bills because I don't give all my money to the gas station or the utility company or, the landlord or insurance companies. So I know exactly where my money is going, and I have really reduced the amount that just flies out the window. Friends of mine that are in the banking industry say, we get to attach leeches to your body, so we get to siphon away some of your income slow and steady, and you don't realize it. And that's what even streaming services are trying to do these days. Everybody wants to attach a little tiny leech to our budget that siphons the money out the window. And the truth is, especially as we get closer to retirement, but honestly, throughout our entire adult life, if we can stop making everybody else rich with creative choices, and if we're a parent, we want to think about this for our millennials and our Gen Z because they live in a world that does not add up. So having, as I often talk about, intergenerational, I am blessed to be able to have conversations with some very wealthy, powerful people. And I have spoken with people that have kept money over centuries in their family. They plan 100 years in advance. So they're thinking not just about their generation, but about they may have elderly parents, they may have kids and grandkids, and they already are thinking about who's going to, and it's stewardship more than inheritance that you can blow through. It's stewardship. How are you going to keep this wealth and this asset in the family? Okay, so let me show you 4 quick tips on World Sustainability Day that you could think about. And again, a lot of them are going to be beneficial not just for our planet, but also to you. So if you go to nataliepace.com/blog, it is the blog that's up there right now. I will be including a link to it. And there are 4 ways to celebrate World Sustainability Day. That was generated by AI, just FYI. Okay, so here they are. You could ride a bike, walk, take public transport, or telecommute instead of driving. If, obviously we're getting towards the end of today, especially if you're on the East Coast or in Europe, And so if you didn't do it today, can you do it this weekend? Like maybe you do commute to work and you've never tried this before. Try it on a day that might be easier for you, right? That's what I did the first time I tried it. I tried it on the weekend when all I had to do was like manage to get fed, right? And that was hard for me because I didn't plan in advance and I had never done it before. So again, I'm not suggesting that you be late for work. Buy bulk goods and ditch the plastic packaging that's covering everything. And support regenerative agriculture. Eating local and organic goes a long way to doing that, but there actually is a movement towards regenerative agriculture, and that's one step beyond local and organic. And what that does is that those farmers are actually carbon stewards. So you have food that's nutrient dense, no pesticides, and it draws carbon down and stores it in the soil, which is a big piece of the solution as well. So I encourage you to take that part seriously. Plant a garden at home or your local school and get rid of the grass. There's many ways that you could actually save a lot of money on water and save water, which is a big deal. Also, opt for natural fibers over plastic clothes, polyester, and shoes, rubber. So, again, you can learn a lot more if you are interested in sustainability and saving money in that blog, in The Power of 8 Billion, which is my book on sustainability, and at earthgratitude.org, where we have a 5-part free docu-series and free ebooks. So lots of resources for you on whatever you might like. Now, before I close down, I'm going to go ahead and just stop the recording. And then if anybody has a question, I'm happy to do kind of a lightning round response to it. One last thing I want to say is that remember, if you're an active volunteer, one of your perks is that you can actually send us a question. I'm happy to answer it in the video conference. The easiest way to make sure it gets answered is to email info@nataliepace.com and have it put on our Q&A list and email us at least a week in advance. Okay. All right, so thanks again for joining me today. Remember, we do a video conference at least once a month. I always want it to be relevant for you. So please do email info@nataliepace.com and let us know what it is that you're excited about, what you're concerned about, what you think is super hot, whatever it is. We're happy to look into it. Maybe I just wrote a blog on it and we'll just give you a link, or maybe it will be the subject of an upcoming video conference. Also, I just want to remind you that I do daily money tips pretty much on the broadcast channel at Instagram. So be sure that you're following me at least on Instagram. So if you go to nataliepace.com, you can click on the Instagram logo there. That'll take you over there. Here you can see it as well. I'm Natalie Wynn Pace on Instagram. So those are all things. Here's the resource for The Power of 8 Billion. It's up to us. I just published the ABCs of Money 6th edition. It's easiest to find it if you go to nataliepace.com and click on the book cover. And one last thing is that I almost always am able to put most of my ebooks for free between Black Friday and Cyber Monday. That's every year, that's my holiday gift to you. So I'm going to try to do it again this year. So just keep your eyes out for that. And thanks again for joining me.